All right, a quick peek at the corner of Wall and Broad right now, where we have the Dow down about 30 points, so well off triple-digit losses earlier on this day. We look back 30 years ago when we had a free fall going in the markets. They lost almost a quarter of their value, the equivalent of 5,000 plus points today if it were to happen. None of my next guests were even alive back then, but they are sharing a sense of history here, including Steve Leeb, Lizzie MacDonald, and FBN senior editor, and our resident Brainiac here. We got he and Lizzie go at it for who's the biggest Brainiac of them all. Charlie, I ended with you and your thoughts on this. I know there are a lot of comparisons. One thing that struck me is the 10-year note on that day was over 10%, and it has never been that high since. That's interesting.
Right, yeah, it tumbled actually down to around a little over, I think, it was just over 9%, tumbled about 200 basis points as investors flooded into the safety of treasuries in reaction to the sell-off. We're at a point now, though, where we're looking at, 2.3, 2.4%.
Yeah, that's why they say, at least on that basis alone, you can't have something like that happen again. Rates are so low.
Right,
you could argue that that's part of a bubble right there, right?
Right. Well, that's one of the things that's fueled the latest stock market surge that many are calling a bubble.
All right, now I encourage any and all to freely interrupt and get into this. But Lizzie, what do you think?
Well, it could happen again, by the way. Absolutely could happen again.
Different circumstances, but it could happen again.
Yes, the market had run up that time, and then basically Iran and the U.S. started shooting at each other.
Oh,
the U.S. was shooting at, Iran was shooting at U.S. ships off of Kuwait. Then Reagan official James Baker made comments about the value of the dollar, that he wanted the value of the dollar to go down versus the German mark. Then what really did it was fear. Yes, you could say program trading, computer trading, but even Elaine Garzarelli, who called the crash on October 12th of 1987, the slide really started on October 14th of that year. She said it was fear. Forget the computers. We have computers more now than ever before, computerized trading. It was primal, gut-wrenching fear is why the market crashed. And so, and by the way, 15 months later, the Dow did retrace in 1987.
Right.
And back then,
right,
and back then, back then,
you're right. I mean, we finished the day at a little north of 1,700.
Yeah.
Look at the Dow now, over 23,000.
Yeah, and back then you had Nicholas Brady saying, we got to do more market regulation. Watch this. Alan Greenspan was the guy who said, you know what, dial back on market regulation for now. See what happens.
What did he do? Well, he provided a lot of liquidity. He had just been appointed Fed chairman in August, right?
Right, he had been, Neil, and he earned his spurs.
I think I talked to you that day.
You may have.
I may have.
We may have. And it's very possible. But the big difference is Greenspan that day was actually out of town. He knew that there was, a little bit of chaos in Wall Street, and he got off the plane on that day, and he said, how did the Dow do? And someone said down 532. I think that was the number. He said, well, that's not so bad, 532. No, Mr. Chairman, 532.
But he had to know, Lizzie was right, the week before, on the Wednesday the week before, we fell almost 4%. The next day, 2.5%. The day after that, 4.6%. So were they ready for something
and the
big?
Friday saw the first triple-digit loss.
That's right. That's right.
First triple-digit move. And
Friday was a tip-off. I mean, honestly, I do remember so clearly that weekend. And I said something is going to happen.
There was
Monday.
a great storm in London. There were blackouts, right? Remember? And then the Asian market started to sell off. Australia, Spain, the UK. Today we also still have computerized trading, and we have a more fractured market than ever before.
Did that accelerate it?
No,
do you think
I think it was the accelerant.
Trading, portfolio insurance, we come up with creative ways to avoid something, but we invariably get it just the same.
It was portfolio insurance. The market
Explain what that was. You could essentially insure yourself against losing.
Buying futures, and it just kept feeding on itself.
Because everyone was trying to leave at the same time.
And basically, despite Greenspan and everything else, what saved the day, really may have saved the whole shebang, was Goldman Sachs. Their willingness to start buying futures or call options, and I'm not sure which, that really gave the market
a lot of big companies, right? Peter Lynch famously was buying stock later that week. IBM was buying its own shares.
Right. Intel.
Right. So you see acts of bravery like that, even while it's falling. But Ronald Reagan had an interesting kind of reaction to this, that he didn't have a reaction to this. In other words, he didn't panic over it.
I remember Sam Donaldson on Channel 7 that weekend saying, What crashed? The market's still up or down a little bit for the
because
year.
the markets had run up about 700 points.
Finished.
Hang on, from January to August, and it took out 500.
Right.
The U.S. economy was growing about 7.6% that year. So
Not
the economy
really that
was
fast.
The economy was growing
Maybe
over
nominal
7%.
growth, but
Were the fundamentals okay back then? Because you always hear
yes, the
every
fundamentals were
crisis-
fine.
I'm not yelling.
Oh, I'm
just-
sorry.
That's okay.
I'm sorry, Neil.
I'm kidding. But you always hear, well, fundamentals are fine. The argument was, the officials at the time in 29, the fundamentals are fine. And whenever I hear comparisons, well, the fundamentals are fine, interest rates are low. But I know history doesn't repeat, but as you remind me, Lizzie, it rhymes and all that, that something else could be the catalyst. Is there something that you worry about, or any of you worry about?
Yes.
Interest rates going up, North Korea, and also...
Well, that would be a black swan
Well, yeah, that's true.
development, right?
We have a more fragmented market than ever before. We have a dozen trading exchanges, 30 off exchanges, dark pools, and only 30% of the trading is on the NYSE right now. So, it's a
Stock
fractured
Exchange.
kind of market right now.
Neil, one big difference is that in 1987, well, a couple of big differences. In 1987, a crash was a very foreign event. Most people at that time had not seen the 1929 crash. They had not been alive. So a market crashing, that was something that no one saw as a possibility.
But everyone saw this presaging a recession that would last for years. The media would. What do you worry about most, Charlie?
Well, right now, I mean, what really prompted the crash in '87 was the illusion created by portfolio insurance that your risks were hedged. And as we
There's
learned,
no such thing, is there?
Risk happens quickly, and when it comes, it's ugly. And right now, there is some concern that there's some, belief that, hedging through futures and options like that encourage excessive risk taking.
People still back to borrowing a margin again for some?
Yeah,
Not as high as it
margins
used
are
to
very
be.
high. Margin debt's very high right now.
Do you think it could happen again at this magnitude?
Well, right now we have circuit breakers in place, so there's a 7% drop.
It could arrest the fall, but it wouldn't stop it.
Wouldn't stop it, no.
I think the most frightening event you want to focus on over the past couple of years that at least gives me pause is at the beginning of 2016. We were doing fine. This economy was starting to grow, et cetera. Yet we had the worst ever January we have ever had, including 1930. And the cause was China. They had a crash in their currency. They had a crash in their market. Back in 1987, we were the entire world.
Could it happen again?
Yes, it could.
Will it
definitely
happen again? How soon?
I pray not.
Well,
I mean, if
that.
I could predict
Next
exactly,
week after, month?
Neil, someone could hack into our systems right now. We're vulnerable. It could happen again.
It could happen probably, if it does happen, it'll be maybe next year in the first half.
I think it could happen again. I don't know when.
Thank you very much, because I don't know either. All I do know is that if you step back from these charts, and these guys are the experts, the one in my office that I keep of the Dow from the beginning of the last century, it goes up. The closer you get, jagged edges, but invariably grows up and goes up too.